Hey everybody, Michael Cruz here with Foresight Insurance, and yesterday I created a video to shed light on the hard insurance industry, the difficulty that insurance agents, insurance companies, and customers are facing with this hard insurance market. But I wanted to expand on the 7 variables that are affecting these rate increases, because I kind of skipped over a few of the reasons. So I wanted to really dive deep a little bit closer on those 7 variables. And then I wanted to give you 5 things that you can do to influence that rate. So that way, as you start, reviewing your insurance or maybe shopping around, you're able to ask the right questions. So let's review first, real briefly and quickly, the 7 variables that are affecting the insurance rates. Number 1 is other people's actions. What this means is things like insurance fraud, or if, for example, an uninsured driver collides into you. These are claims that are, can affect the pool of money, right? Number 2 is your own insurance history, right? Your claims, how long have you had insurance, your credit score, any discounts that you may qualify for. So it's your own insurance history that affects also the rates. Number 3 is the coverage that you select, right? So if you select more coverage, then it's going to be more money. If you select less coverage, it's going to be less money. So you control what coverage. And number 4 is going to be carrier actions, right? Carriers are companies just like any other entity. Maybe they're having staffing difficulties, maybe they're having lower investment returns. All these things can affect also kind of those rates. Number 5 is going to be the industries that insurance companies depend on. As we talked about, the body shops, basically, increasing rates, having supply chain issues. For example, we've had instances where only a bumper was, involved in an accident, and in order to repair that bumper, it's taking 3 weeks to 4 weeks because, body shops can't find bumpers, So now the insurance company has to pay a rental car that would have cost 3 days. Now it's costing 3 weeks. So, all those are things that are affecting the insurance industry. Number 6 is going to be government regulations. And a perfect example, when the insurance company starts seeing the claims amounts keep increasing because of external factors, they try to go to the states and they try to get, a file for rate increases. And let's say that they needed a 16% rate increase to get back to profitability. And some states would say, no, like we'll allow only maybe 8%. So what that does is that then the insurance companies have to close the doors in terms of accepting new business. So they have to get stricter on accepting new business, because if they accept new business, the rates are not going to be what they should be to remain profitable. So, we talked about number 6, the government regulation, and number 7, last but not least, is the thing that I talked about yesterday about being a pool of money, and it's called the profitability, or also called the loss ratio. What this means is, how much money the insurance companies are taking in premiums and how much they're paying out in in claims, I'm sorry. So we talked about these are the 7 variables that are affecting the insurance rates, so that you have a better understanding. Now, what if you say, hey, Michael, I really don't care. I care about what I'm paying, and that's all I care about. So then let me give you basically a solution. So when you start shopping around, and you're, now you understand kind of the macro level what's going on in the insurance industry, and now you actually need something practical that, that can actually help you. So here are the 5 ways that insurance agents and yourself can modify insurance, right? Because a lot of times people people forget that, us insurance agents, we don't make up these prices, right? The insurance companies, our actuarial departments are the ones that, basically come up with these prices. So, but there are 5 ways you as a consumer and us as agents that can help you modify the insurance coverage to the best possible, to be able to afford the better rate, to be able to have the best coverage. So let's review what are those 5 ways that you can modify your insurance rate. Number 1 is you want to verify that all the information is up to date. Things like, for example, if let's say you replace your roof, that's something that we need to know because maybe that's a discount. Let's say that now you work from home instead of commuting, 20 miles each way. So all those are things that we need to verify that are up to date. So the first thing you should do with your agent, hey, let's review every single line. Let's review my usage, what you have in the system, to make sure that all the information is up to date. Number 2, let's verify that you have all the available discounts. What does that mean? For example, I've seen scenarios someone has their home insurance with us and their auto somewhere else, I can tell you from experience, you're paying 20% more just on keeping those policies separate. Where like if you put them together, now we're able to lower the cost of the home insurance and the cost of the auto insurance. Another trend that I've seen is people insuring cars with different companies. So you're missing the multi-car discount. So all these are things so that we're gonna go over that list with you and say, hey, let's verify that all the available discounts that you may qualify for, that you're taking advantage of these discounts. We also want to make sure that we review coverage. So number 3 and number 4 are basically the main ways that I see people, kind of modifying the rate. So number 3 is basically coverage. So what does that mean? That means like, hey, let's review all your coverages. Let's make sure that if there's something there that you don't want to pay for, that we remove it, or if there's something there that you want to add, that we can add it. So let's review all the coverages. Number 4 is the deductibles. So deductibles, the higher your deductible is, the lower the cost of the insurance. That's basically your risk that you're assuming before the insurance kicks in. So number 3, number 4, when people shop around, those are the 2 things that I see people touching the most to be able to change the rate. And most customers have no idea. So I give you a perfect example. A lot of times when people want to shop around and they call us, hey, Michael, your rate is too high. I'm switching to so-and-so company, and we have a conversation because we have a good relationship with a lot of our, customers. We say, not a problem. What we would like to offer is a no obligation consultation and kind of compare what you have versus, what you're getting. Regardless of what happens, you make a decision. There's no pressure on our end. And a lot of times what we find that the customer is not aware is that the other insurance company or agent has either lowered the coverage, increased deductibles, and the customer has no idea because all they're looking at is the bottom line price. They're just looking at, am I saving money or not? So we're all about education, giving you the truth so that you can make educated decisions. So the number 5 at that point is basically remarketing your policy, and we kind of go through those steps before we just go and remarket your policy, which means like we're gonna shop around with other companies. We tend to kind of wait for that and make that a last resort, because the reality is when you remarket, the underwriting period starts. What that means is that the new company is looking at you as a new customer, is reviewing your home, reviewing your auto, your history. So, you're really getting a double look into your situation, which can open a can of worms sometimes. Maybe they're asking you to repair your roof, or maybe they're asking you to do something with your auto. So, and also your underwriting guidelines kind of reset because, insurance companies set up these guidelines in terms of how many actions they can take within a certain period of time. So like, let's say 3 years versus 5 years. If you've had, let's say a certain amount of claims and you've been with the company for a longer period of time, you have, more flexibility, if you've been with them longer. So it doesn't always make sense to switch because it restarts your underwriting period. So those are the 5 ways. Again, I'm going to repeat them. Verify that all the information on your policy is correct. Verify that you're taking advantage of all the available discounts. Review all of your coverages in great detail. Adjust deductibles. And last but not least, if none of those make sense, then go ahead and start, the remarket process. Again, Michael Cruz with Foresight Insurance. If you want to, get a quote or you want to get a policy review, we are insurance advisors at Foresight Insurance. What that means is that we're not just interested in giving you a quote. We're looking at your whole situation. We're giving you guidance, advice. We're looking at holistically your whole picture. And that's what we focus on. Is we want to help you. We want to give you the guidance that you need so you can make educated decisions.